Our next guest has been a dollar bull since the summer, and he says he remains dollar positive for 2010. Joining us now is Erik Halpenny, European head of global currency research at Bank of Tokyo-Mitsubishi in London. Erik, I just mentioned the fact that you have been a dollar bull for some time. In fact, I went back and looked. It's been at least since the late summer. Did you expect things to turn dollar positive this quickly? And given the fact that it has happened this soon, how does that change your outlook for 2010?
Well, no, it certainly happened far more quickly than we had anticipated, and certainly the dynamics that are driving the dollar stronger, in particular against the euro. The focus on Greece is more intense than we had anticipated, although we did believe that the fiscal concerns in Europe would be a feature of euro selling this year. Our view was very much based on the US economy and that outperforming and the Fed being more active in exiting its strategy as we move forward. I still think that's a story for 2010 as a whole, but certainly in the short term, I think obviously the issue is Greece and how the policy dynamics play out in terms of trying to stabilize the debt markets in Greece.
Erik, I mentioned that the dollar is ever so slightly weaker against the euro this morning, trading at $1.3647. Where do you see it, say, in 3 months' time?
Well, we had anticipated that there would be a brief rally, if you like, as concerns over the Greek debt situation receded. However, I must say in the last couple of days, I've been waiting and anticipating something on the policy front that would give the markets a degree of clarity. And the EU summit statement last week suggested that would come possibly today at the ECOFIN meeting. But certainly there seems to be some disagreement in regard to laying out a plan to stabilise the markets that Greece seems to want, and the rest of Eurozone members wanting more aggressive austerity measures from Greece, which Greece don't appear to want. So there certainly seems to be some policy divergence there, which I think the markets are growing concerned of again. And we're seeing 2- and 10-year yields in Greece spiking sharply as we speak. So I think in those dynamics, it's very likely that I think the euro selling will continue, and we'll see euro dollar move down towards the 130 level. We need policy clarity, and we don't have that.
Did it surprise you that we did not get a firmer sort of what we'll do if the Greeks don't comply from EU officials today?
Well, given that that was mentioned in the statement last week, I did expect something of greater clarity, as I said. But I can understand the reluctance. Like, we had Otmar Issing in the FT today, and he talking about no bailout being a hallmark and a key foundation of the entire EMU process. And he was a key figure in the ECB when the single currency began trading in 1999. So there are some senior policy figures in the background, I think, who are very much against any kind of public display of aid without Greece stepping up to the plate and giving more credible austerity measures, which the markets appear to want.
Well, on that subject, we heard from Issing yesterday. Today, Nouriel Roubini says neither the EU nor the ECB should be the ones handling the Greek situation. It should be the IMF. Would you agree that an IMF parachute into this situation might restore or at least lend more confidence to the prospects for Greece's debt and deficit?
Well, the debate going forward is if Greece needs assistance at some point, and I think if Greek bond yields remain as high as they are now, that's probably likely. The question mark then is does it come from core Europe or does it come externally? And certainly the reluctance in the last couple of days for any kind of aid package to be announced would appear to suggest that maybe it's the external route. However, having said that, Greece has indicated, the Greek officials have indicated that some agreement was hatched last week, and it's more about just a reluctance to announce publicly what that plan is before Greece steps up and announces more austerity measures. So I would still say going forward, the more likelihood is that there would be some internal support rather than the IMF coming in as the external support, if you like.
Erik, very briefly, is your dollar bull call the one that you have the most conviction about right now?
Yes, I think generally, as we last year we had a very poor year after March for the dollar. And I think, as I said at the beginning, the Fed are going to be very active later this year in regard to withdrawing liquidity and stopping quantitative easing. And I think that in itself, relative to other central banks, will be a key support for the dollar.
We've got to run. Erik Halpenny of Bank of Tokyo-Mitsubishi.